Welcome and thank you for joining us for our second money management session. So this is Introduction to Property Ownership. We apologize for the delay in the start. We had a bit of technical issues, but we've resolved it now. So before we start, we'll just go through a little disclaimer that this is general information only and doesn't take into consideration your personal circumstances, your financial situation and needs. So here at O'Brien's, we work with you to help you create your ideal life. And we do this by working with other specialists to ensure that the options and solutions provided to our clients are appropriate and suits your unique situation. So my name is Tracee Pang and I'm a financial advisor here at O'Brien's. And we have Lisa here today to assist with any technical issues. Today we have an amazing group of panelists based in Melbourne to help our first home buyers. So that could be residential or even in investment purposes. And to understand things to look out for. We have Rory Sercombe from Own Home Loans. Rory and his team do more than just finding you the right home loan package. They look to help to reduce your debt, they assist with debt management, and to help clients pay off their debt sooner. We have Zeno and Kobica from Viva Property. Zeno is commonly referred to as the agent that cares, property agent that cares. This is obviously made aware via Rate My Agent as well. That's a tool that's available to all his clients. And whether you're looking to buy or sell, Zeno and his teams provide a professional and no-fuss approach. We have Elizabeth Michael from City Pacific Lawyers. Elizabeth and the team have been providing quality legal advice to businesses and individuals for over 25 years. They are passionate about their clients' individual requirements and work closely with them to optimize their situation. So we'll have Rory to start now.
Thank you very much, Tracee. I really appreciate that. Let me just get my screen shared. Yeah, well, thank you and welcome everyone. And look, thanks so much, Tracee and the whole team at O'Brien's for having me a part of this. It's great that they're offering this service to hopefully give people a bit more knowledge about getting in and buying property. So it's great to be a part of it. So what they have asked me to do is, I suppose, just cover off some of the key questions that I get asked quite a lot as a mortgage broker. There's very similar questions, but look, a lot of it is specific to people's needs and everyone's got their own scenario. But I just want to run through some of the things to get you prepared to buy a property, be that as Tracee mentioned, be that as something to live in or potentially to invest in. But hopefully you get something out of it. So Own Home Loans is my business. We really pride ourselves on finding people the right home loan and then showing them how to pay it off. So, and we always talk about three things: owning your home, owning your life, and owning your future. And it's all about what happens after settlement to get you in a better financial position. But the first step is getting you there, getting into the property that you want. So just some of the things that you need to think about, and I get asked a lot about is, am I ready? How much money do I actually need to make this happen? And there's quite a few different things that you need to cover in order to get in and buy your first property. So obviously there's deposit, and that's kind of having a bit of equity in your property, bit of ownership from day one. There's stamp duty and other government charges, and sure, there's some waivers involved, and at the moment there's some discounts of stamp duty. But quite often that is payable. Lender's mortgage insurance is something that is charged to people who don't quite have a full 20% deposit. And look, it's something that is offered from banks you may have heard of. The positive of it is it gets you potentially into a home before you could have afforded it by saving up yourself, which is great. However, the negative is that you are actually just paying a lender's insurance policy, which doesn't actually cover you for anything. However, as I said, it does get you into a property potentially earlier than what you would have without it. There might be some lender fees. There might be some application fees, some valuation fees to be mindful of. Conveyancing, I'm not going to go into too much of that because Elizabeth is the absolute expert on that, and she'll be speaking soon. Insurance, so you want to get your property insured, and there's a cost involved in that, and then moving costs if it's your first home. And of course, what we don't want to do is drain your bank account. We don't want you to come to settlement and not have any money at all to live. So they're the main things that we want people to be mindful of and have a look at before they buy a property. So where does that money come from? The best place is your savings, and Tracee, on Tuesday's webinar, covered off some really good ideas of how to save and get in front and pay off some of your other debts and be in a position to have a good savings base, which was great. The more you've got, the better. You can get a guarantee. A lot of our clients get a family member to guarantee their loan, which, if you're in a position to be able to do that, is a fantastic way to get into a property soon and not having to pay mortgage insurance, and it can get you into the market much sooner, which is excellent. There are some government grants available. Look, governments are throwing money at home buyers at the moment through stamp duty savings, through building grants. So depending on where you want to buy, how much you want to buy for, and your personal circumstances, there could potentially be some really good grants available. And then the last one there is where I step in primarily, and that's for a loan. So what we have to do that is a couple of bits of maths, really. And one is have you got enough money to get into the loan? Have you got enough deposit? But importantly also, we're looking at your income and we're saying, okay, have you got the income to support this loan? Now, and there's a big difference, I suppose, between what you can do and what you should do. So, sometimes you can walk into a bank and they say you can have X as a loan. However, they're not the ones who have to pay it off. We want to have our clients have a loan amount and a repayment that is comfortable. That's not just can you get to it, but there's a little bit of a buffer in there, because there's nothing surer that if a loan or if a repayment amount is just what you can afford, especially in such a low interest rate environment that we're in today, you're going to be stuck in that loan for a long time, and it's going to be really hard to make your way through it. So that's really important to us, to try to get you to a position where you can afford the loan, you can afford to live your life, but you can also get in front of your mortgage as quickly as possible. So that's what's really important to us, and hopefully should be to you guys. So some people come through all that and say, okay, well, really, I can't actually afford to buy where I want to live, or it's not the right place to buy. But say for instance, I want to live in the heart of Melbourne, and that may not be the easiest place to get a loan for, and it may not be the right investment decision or property purchase decision. So what we're finding some of our clients doing is what's called rent vesting. So they will live where they want to live and buy where is potentially a better choice for an investment. So that may be, as I said, live in the heart of Melbourne, but buy a property in a regional town or in another state, perhaps. But there's certainly that option, which some people don't think about, but it can be a way of potentially having your cake and eating it too. So that's certainly something that we talk about a fair bit. What I get asked also quite often is, why should I go to a broker versus going direct to my bank? And I suppose for me, it's like saying, you're not going to walk into McDonald's and have them talk to you about a Whopper. They're basically got their stuff to sell, and that's what they're going to sell to you. Whereas, if you go to a broker, they've got a big chunk of the market. They might have 30 or 40 lenders that they can choose not only what the best loan is, but they've got a whole range of different policy options. So quite often people will go into their bank and get declined for a loan. Whereas if they just went to another lender or knew of another set of policies, they could get approved for that exactly same loan and potentially at a better rate. So for us, it's being able to know where to place a loan, know where is the most appropriate home for a loan, and see what the best sort of market rates we can find are. The other thing to mention is that as of January 1 next year, brokers have what's called a best interest duty. So legally we're obliged to, and I hope that most brokers would have done it anyway, but we're legally obliged to act in our customers' best interests. So whereas if you walk into a bank, they're not. They can act in their own best interests quite legally, whereas if we cannot, which is a great thing, which I suppose formalizes what I think the overwhelming majority of brokers have been doing anyway. When it comes time then to arrange finance, what we do is we gather lots of information, pay slips and bank statements, and compile it all, choose the right lender, and then importantly get our clients pre-approved. So we want our clients to be ready to go. So when the right property comes up, they can pounce on it and they can get into the market with confidence, knowing that we've got a lender there to back them, which is really important. But just know that not all pre-approvals are made equal. Some pre-approvals just run through their IT system and no one has actually picked it up and assessed it. Whereas any pre-approval that we get, or a whole range of or other brokers, we want to make sure that someone has actually assessed it, so you can go to an auction and bid with confidence or make an offer with confidence. But any bank or broker should guide you through that process to make it as easy as possible. But the starting point is having that chat, going through your own scenario, own situation, and finding a loan that suits. And then the very last slide, as I have just ticking over my time, is now it's time to pay it off. We get you the loan and we really want to focus on paying it off or getting equity in that property to move into the next purchase or the next investment or whatever it might be. But this is where now we start getting into a better financial position, and it starts with having a debt that is structured in the right way to pay it off soon and to help you along the way, getting you in a better financial position. So that is my time, and I hope people got something out of it. I'd love to hear any questions that you may have at the end when we do a panel. So I'll hand it back over to Tracee.
Thanks, Rory. And now we have Zeno.
Hello, everyone. My name is Zeno from Viva Property. I think, Lisa, you're going to be managing the slides for me, so I'll just yell out when to change slides. Thank you for your patience, everyone, with this technology. So yeah, my name is Zeno, Viva Property. We are a new company, so if you haven't heard of us, our official launch date was on the 1st of July this year. Started off with a bang, and then, of course, the Victorian government marked the stage 4 restrictions, and real estate came to a grinding halt. So there was about 3 or 4 months worth almost of very little transactions, a bit of a rocky start for us, but we're back now. And the past 3 to 4 weeks have actually been a little mini boom. I've sold or transacted more properties in the past 3 to 4 weeks than I have in the past 3 to 4 months. Amazing state of affairs. Now let's click to the next slide. The question that I get asked most is, what is the state of the property market? I see the quotes should be appearing there. We need to consider a number of key metrics in order to answer that common question. So if we click to the next slide, one of the biggest key metrics is, of course, the cash rate, currently at 0.1%, which was confirmed again yesterday. And word on the street is it's going to remain at this level for quite some time to come. So those that are in a strong financial position who haven't been affected by COVID all that much, have secure jobs, are in a great position because they can get incredibly, ridiculously low rates that Rory can attest to, probably even better than 1.99 now. And basically making people in that sort of position have more firepower when it comes to buying homes. So the more they can borrow, the more they will pay, spend. And so that has a flow-on effect on the actual price values of homes. A very important metric. So if you move to the next slide, the other key metric is that consumer confidence has bounced back. You can see this is a 10-year graph where the average is on the indexes of about 110 to 115. Then if you look at the end, you can see that at the beginning of 2020, as the pandemic hit, there was a massive cliff. It just fell off, consumer confidence. But you can see the worms are both turning. The confidence in financial conditions and economic conditions are both rising. Another key metric that will govern how real estate values pan out over the coming weeks and months. So next slide. Another key metric where housing affordability has actually improved. So this is the Moody's Investor Service Report, which basically says what percentage of a monthly income average person needs to repay a mortgage. And the 10-year average is 26.4% of your monthly income. Last year in September, it was 25.1, so actually dropped last year. And this year, even during the pandemic, September was at 23%. So we're well below the 10-year average. Another key metric that's pointing towards a potential rise in property values. Next slide. So is it cheaper to buy than rent? Now, according to Aussie and CoreLogic data, if you're under a 3-year fixed rate scenario for houses, just over half of Australian suburbs are cheaper to pay down a mortgage than pay rent. This is up from last year, which was 39, basically 40% of houses cheaper to buy than rent. And if you go back 10 years, it was only 0.4%. Back 10 years ago, there was hardly any suburbs across all of Australia where it was cheaper to buy than rent. What a massive change this has been in the past 10 years. Another key metric to consider. Next slide. So the question is then, obviously, where is it cheaper to buy than rent? So here in Victoria, if you look at for houses, the suburb of Hastings on the Mornington Peninsula, if you bought, you'd be $257 a month better off buying than renting. And the divide is even greater for apartments and units. So the next table there below, it shows Carlton. If you bought there, you'd be $675 a month better off buying than renting. Enormous. Carlton's a gorgeous suburb, and you'd be actually making money buying, technically. Travancore and Flemington not far behind, $560 and $450 a month better off. Let's move to the next slide. So, has the housing market crashed? Now, across Melbourne, house values for the past 6 months to September, house values declined by 4.7%, units down by 5.1%. This is actually a far cry from what the pundits were saying at the start of the pandemic. I remember reading newspaper articles and reports, people saying that's just, we're going to have a September cliff. We're going to be dropping by 20, 40% in values. We're going to have the biggest recession ever. Technically, the previous 2 quarters were negative, so we were technically in a recession. But apparently the last quarter, the September quarter, has shown a spike back up. So we're out of recession, technically. Interestingly, Christopher Joy of Australian Financial Review predicted at the start of the pandemic this year that we're going to drop only between 0 and 5%. But he was pretty much spot on that regard. And also he predicted a rise of 10 to 20. And that's exactly what I'm feeling on on the ground at the moment that property prices are on the way up. So next slide, where to from here? I believe reports will start to emerge, show upswing in real estate values. Melbourne across this year is likely to show a drop of only 0.2%. So we actually, at the start of the year, we actually had we were in a booming market. I remember in January this year, I had one of my best months on record. I thought 2020 was going to be incredible, but obviously the pandemic hit and things stopped. But so we had quite a big rise, and then the pandemic hit, and so we've had a downturn, but now it's spiking back up. So if you average out the year, we're probably going to be at a level keel, or what the CoreLogic data is predicting, a 0.2% drop only. And then from here, we're probably going to show a small but steady rise in values for the end of the year, and then potentially a bit of a spike next year again. Now, what I'm feeling on the ground, just to give you a bit of an idea of what's actually happening, I recently sold in Narre Warren a 4 to 5 bedroom home where the owner was happy to let it go for around 630 grand. We put it to market on a Saturday, the first open. I had 50 private inspections booked in Saturday and Sunday. On the Sunday night, we sold it for 740, basically 100 grand increase or more than what the owner was expecting and what we were expecting. A massive little spike there. And that's in Melbourne's east. On the other side of town, in Melbourne's west, on the same time period, I sold a property in Tarneet, another 4-bedroom home, a bit smaller, bit smaller land, very different market conditions. So in the west side, in Tarneet Way, there's about, I think the last stat was about 300 homes on the market of similar in that area. Whereas in Narre Warren, I think there was about 30, maybe 40 similar. So almost a 10-fold difference in the amount of property on the market. Still, even with all that competition in Tarneet, we achieved what the vendor wanted, just over 500 grand in a typical campaign of about 2.5, 3 weeks. So even amidst all that competition, property is still moving. So again, it's another metric there that's showing that the property market has certainly not hit any fiscal cliff, so to speak, or negative drops. It's actually more likely going to be rising towards the end of this year and early next. The market does have markets within markets. So if you've got any questions on what to do in your particular suburb, circumstance, buying, selling, renting, hit me up. My name is Zeno Kobica from Viva Property, and thank you for your time.
Zeno, and now we have Elizabeth to cover off the conveyancing side.
Good afternoon, everybody, and thanks for being here on this beautiful afternoon. We've heard from Rory and from Zeno about finding the right home loan and also assisting to identify the right property. What I'll be speaking to you about is the actual legal side of it. And why am I speaking to you about this? Well, I'm an accredited specialist in property law. I've been an accredited specialist since about 2011, but I've been practicing in this area for longer than I care to tell you all. And it's a real passion of mine. What we really like to do is educate clients and potential purchasers of property what to do to arm themselves to protect themselves out there in the property market. Sorry, I'm just gonna, how do I advance this? Here we go, sorry. So I like to say getting all of your ducks in a row. So you've got your finance in place, you might have identified a property or a range of properties that you're interested in, but what you then now need to do is do some due diligence on the actual property, and that's where you need a good property lawyer to help you. So we've heard from Zeno and from Rory about the various roles that they play in acquiring a property. But these are various key players. So you've obviously got a broker, which is Rory, Zeno, which is an estate agent. You've obviously got the party that's selling, the party that's buying, your solicitor, and also obviously your bank. All these people are involved in a transaction, and it's important to understand what their roles are. So on the vendor side, you've got the agent who's listed the property for sale. So for example, Zeno might have listed the property. He might show you through the property. You'll see him at open for inspections. And of course, then you've got your seller who owns the property. On the buyer's side, obviously that's say you. You've got your broker who's the one getting you your finance, and then you've got your lawyer who's assisting you and advising you about the property. And the reason it's important to clarify these various roles is that sometimes I hear buyers say to me, oh, well, my agent has told me this, my agent has told me that. And it's really important from a protecting yourself perspective to know that the vendor has engaged the agent to sell the property and to sell it for the best price, and that's their role. And they're obviously going to be supplying you with the information that you might need, but you still have to go away and do your own due diligence. So the whole concept of buyer beware or caveat emptor is what I'm really banging my drum about here today. Now, the vendor is required to produce a contract and a vendor statement, and you might have heard it in your travels. It's sometimes called a Section 32 vendor statement. And essentially what that is reference to the Sale of Land Act, which is a bit of consumer protection legislation, which tells vendors the information that they need to tell prospective buyers about this property before they can sell it. The problem is, of course, is that how do you know that the vendor statement that you've been presented in fact ticks all the boxes and is legally complying with the Sale of Land Act? You don't know that unless you get it reviewed by somebody who's qualified to review such documents. For example, if there's an owner's corporation, is there an owner's corporation certificate that tells you about things like upcoming levies or problems in the common property that might end up costing you money? These are all things that you need to have checked. So it's not incumbent on the vendor to tell you everything that's wrong with this property. It's up to you to go away and do your homework. So before you actually are ready to put pen to paper, make sure that you've done your due diligence on the property and get advice about the documents that are presented to you to sign. So how do you do your due diligence? Well, obviously you go through and you have a look, but that's not the be-all and end-all. Because you could have a look at a rectangular piece of land with a house in the middle of it, but do you know whether the fences, as you are inspecting, are actually on the title boundaries, or is there an encroachment? And are you potentially looking at property that's not necessarily all on the title boundary? Things like getting a building and pest inspection are important. I could regale you probably all afternoon with horror stories that I've heard of people racing in to sign a contract. Maybe they've bid at auction, they haven't understood the process, they've signed a contract only to realize, hang on a second, there's a massive termite infestation here, and I'm going to have to pay to have this rectified. Or there's a massive crack in the foundation, and I'm going to have to spend some money with civil engineers to actually rectify the problem here. You're better off getting these things done in advance, and you can have contracts with conditions in them that say that you signing this contract and you agreeing to settle is conditional, for example, on a satisfactory building inspection report done, or a satisfactory pest inspection report done. And every property is different and unique, and so therefore getting advice around these things is important, especially for example, a high-rise apartment complex that you might be interested in buying a property there. Well, there's a massive issue going around in Victoria in the property market with some of those properties that were built maybe in the last 5, 6, 7 years, which have flammable cladding on the property, and there's a process of rectifying this flammable cladding. But essentially, the councils are issuing building notices to these owners corporations to say you must rectify this cladding because it's highly flammable. So number one, if what you're looking at might have flammable cladding on it, you need to protect yourself, and B, A, because it's a fire hazard, but B, even if it's rectified, the owner's corporation, which you will automatically become a member of if you purchase a property that's affected by an owner's corporation, they will levy fees against the owners to recover the cost of rectifying, because 9 times out of 10, the builder that's put this flammable cladding up is out of business. They've gone into liquidation. So I don't mean to sound alarmist, but these are very common problems that clients are finding out there when they're on the hustings looking for properties to purchase. Some of the other areas that you can, I suppose, have potential disputes about are what's included in the sale or not. For example, does the dishwasher come with the sale, or is there a pergola outside that was constructed, but is it illegal, and have they gotten the proper council permits to actually build it? Unfortunately, had a client who bought at auction. There was a windstorm in Melbourne. We love our windstorms in Melbourne. We have them all the time. First big windstorm, the pergola blew over in the windstorm, only to find that it hadn't been properly constructed, and she then had to make an insurance claim, and there was some argy-bargy because it was an illegal structure. So the insurance company was saying, well, hang on, it's an illegal structure. We don't insure things that are illegal. So how do you do that? Well, you look at it, you know, visually look at things and make sure that, look, if there's something new, they've put a new family room on the back, have they actually gotten building approval for that? Things like boundaries, and especially if you're, for example, buying in a development and you need a 50-meter frontage to do a 2-lot development on it, well, you want to make sure that you've actually got the proper dimensions of the block, and that you can assure that by getting, for example, a survey done. Understanding what easements and covenants are on the title. For example, there are many single dwelling easements on property titles, which means if you were planning on doing a multi-unit development, you'd need to have a look at, well, is that covenant going to prevent me from doing this property development that I want? Availability of services, probably not as common in metropolitan Melbourne, but certainly if you were looking at buying a country property, is there town water, or is it on water tanks, and is there a septic tank? Things like this. Another thing to be aware of is if you do go and buy at auction, there's no cooling off period, and there's no conditions. You're buying it unconditionally. So that's why if you were planning on going to auction, you really need to do your homework in advance, which is that whole concept of getting your ducks in a row. Also, you need to be aware of, again, I won't touch on it too much because Rory sort of talked about it a bit, but you need to understand what your stamp duty obligations are. So it's not only just the price of the property, but you will also be liable for stamp duty on the transfer. On certain new builds, there's GST payable. And again, you want to have the contract reviewed so you understand what your potential liability there is. I know we're talking to some accountants today. They will tell you about the margin scheme, which I won't go into today, but that will help you understand what your tax liabilities are. So if you're buying a property for an investment, then you might also pay land tax into the future, and that's levied on a yearly basis. If it's your principal place of residence, there's no land tax. There's an exemption for things which are your PPR. Again, another area to be aware of, because those affect your outgoings, how much it costs you to hold on to that property every year. Also, another issue is who are you buying this property with, and how do you want to hold this title? This is a discussion that we have with clients about if you're holding it jointly with another party. For example, let's say your spouse or your partner in life. Are you going to own it as joint proprietors, which means if one of you falls off the perch, will the other one automatically be entitled to it? What if you're a blended family and it's a second marriage and you want your part of the property to go to your side of the family? Then you might need a different form of ownership, or you might be buying an investment property with a friend or another family member. Not uncommon for family members to say jointly invest in a beach home or jointly invest in a property because they can't afford it on their own, so they get an investment partner. So you would look at something like tenants in common. Again, you need advice around how to best hold that property because it affects your estate planning as well. You might have heard a bit about Econveyancing, PEXA. I'm mentioning it because this is now how we transact the transaction, if you like, that takes the property from the vendor's name into the purchaser's name, and the lenders come into this workspace as well to put their mortgage on if you're borrowing, and the outgoing mortgagee takes their mortgage off from the vendor, and this is how the settlement is transacted. This is how most, 99% of our settlements now are in this form. It's really just to make you aware that really in the last, I guess it's really 3 years now, this whole area has transformed from like night to day in terms of the way in which this part of it is transacted. However, the actual documenting of the sale, the review process, making sure that you're doing your due diligence, none of that has changed. It's still very important to do all your tire kicking and test driving of the property before you actually put pen to paper and sign, or electronically sign as we do today. So I know we're going to flip it over now to panel discussions, but this is my contact details. We're always very happy to have inquiries from people. We're very passionate about educating people about getting into the property market and what the things they need to know about, get things reviewed before you sign them. Always happy to take inquiries, but I will now throw it back over to Tracee to perhaps conduct the Q&A.
Thanks, Elizabeth. Yeah, so at the moment we don't have any questions that's come through. So it's really just if there's any questions that you guys have for each other in your industry as well.
Yeah, I've got a question.
You go ahead. Yeah, I've got one.
I've got a question for Rory.
Mm-hmm.
With the buyers that I'm dealing with now, a lot of them are finding it difficult to get approvals in a decent amount of time for home loans.
Sure.
Are you finding that? Has that changed recently? Is it there's certain banks that are better, or?
Yeah, absolutely, Zeno. Look, I think that there are some lenders who are taking weeks to pick up a file, which is, it just doesn't suit timeframes when you want to buy a property. But there are others that are much quicker. So what I sort of do with my clients is we have a discussion and say, let's maybe get you pre-approved with just a lender that we know is going to be fast, get you the pre-approval, and then once you buy, reassess it later. It's something that we don't like having to do, but if it means getting someone an approval before they can, before an auction, that's what we have to do. So some are still really fast, some are a couple of days, but I think a lot of lenders have got cashback offers and these insane interest rates, which is spurring on refinances, which is slowing down everything, including for purchases. But yeah, you're dead right, mate. But there is ways around it, but that's just what we have to go through.
Yeah, because just a word of advice. Sorry, Elizabeth. I just want to add to that. For any buyers out there, you need to get pre-approval at least in play, and as fast as possible on getting a formal approval, because most vendors won't wait. I mean, some banks I've heard can take up to 4 weeks, 3 to 4 weeks. I had a buyer make an offer, and they said that their bank couldn't do it any quicker than 4 weeks, which is insane. So a vendor won't wait that long,
No.
and the buyer will miss out on that particular property. So you need to really get that in play soon, and work with someone like Rory to get an offer that's acceptable to a vendor.
Absolutely. John, I might, there's a question popped up, if Tracee, if you want me to ask it of Zeno.
Yep.
When you mention being better off buying a property than renting, do you mean buying a property exclusively as an owner-occupied property? Sorry, as an owner-occupied property?
Yes, that particular stat was based on buying a property that you own and you live in. it wasn't investment. No. Investments is probably a little bit different. I mean, investment loans are a little bit higher. So I guess the monthly will work out a little bit differently. But yeah, for owner occupier, that particular stat.
Thanks, Zeno.
Something that and this for Elizabeth, if I could, something that I encourage my clients to do is always see someone like Elizabeth who's a qualified lawyer, not just go to a conveyancer. Did you want to touch on the difference between a conveyancer and a legal professional such as a lawyer such as yourself, Elizabeth?
That's a good question. We do get that a fair bit. Look, a conveyancer is not qualified legally. We like to think that we are streets ahead in terms of our knowledge. We get referrals from conveyancers because as soon as there's a problem, they can't deal with it and we have to refer it to a lawyer. So I say to people, look, when you're buying a property, whether it's an investment property or your home, it is probably the largest purchase that most of us will make in our lifetime. I certainly know that my property was the largest purchase I've made thus far. It pays to get expert advice in circumstances where you're making such a large investment of money. You'll be paying it off. You'll be living in this property. The average home loan's 30 years. So it's really important in that circumstance to get expert advice in that area.
Not 30-year loans when you get them through me, Elizabeth.
Oh, sorry. I know, because you're going to teach us how to pay them off earlier. Yeah,
that's right, exactly.
I had a question for you, Zeno.
So before you start, Elizabeth, there was a question that came through. It's just I'll put this to the panelists on what are your thoughts on buyer advocates at this current time?
I guess I can answer that from my perspective. Obviously, a real estate agent, deal with buyers all the time, and I deal with a lot of buyers advocates. I've got about 60 of them on my books. Buyers advocates are great in that for those who are time poor, who don't know the market that well, buyers advocate can certainly point you in the right direction, potentially find off-market deals. There is this misnomer though that there's a hidden off-market market. Generally what that means though is certain buyers advocates have agents, and they may hear about a property that is about to go to a market, and usually it's 1 or 2 weeks in advance of it hitting the market, and they call it an off-market sale. But it's not actually like a completely hidden market. And most of these properties do end up going to market because most vendors want the best possible price. So unless the buyer buys at a price that their owner just can't refuse, the property will eventually hit the market and be exposed to everyone. So there are pluses and minuses to using buyers advocates. Obviously, there's a cost involved, but how much do you value your time? I guess.
I couldn't agree more, Zeno. I think that's what I speak to my clients about, and they say if you haven't got time to go to opens for inspections and learn the market, then you can buy it. So there's 2 ways to get the knowledge. One is do it yourself, do the work yourself, or buy the work. So and if you're in that situation where you simply have to buy that, and you've got enough cash to do it, then that's great, but don't expect them most times to get you a deal that you wouldn't have been able to necessarily get yourself in a competitive environment. But if you've got some confusion about where to buy, or you've got a very time poor, then there is a use for them, I think.
An example of a client that I know that used a buyer's advocate, she was buying a property for her daughter who was disabled. She had certain very specific requirements about no stairs and in a unit development, but not too many units in that development, and very confined to a certain area of Melbourne and certain suburbs, and she had certain boxes to tick. She didn't have time to do that. She was busy professional and also looking after an elderly mother as well, and so she used a buyer's advocate, and she was very happy with that because again she was very time poor and she had quite strict requirements about what she wanted. The buyer's advocate then goes out to market, looks for things that are ticking the boxes, and then brought the few options for her, and so that saved her a lot of time. And so she was again happy to pay for that expertise and that assistance because she just didn't have the capacity to do that herself time-wise. So I was going to ask a question of you, Zeno, in that, as a result of the pandemic and a lot of people working from home, what is the demand, or what sort of movements are you seeing in, for example, country properties, or the tree change, where people are saying, well, I can actually now work from home permanently, or a lot more flexibly now, and maybe I'll live in Ballarat instead of commuting every day to Melbourne. Have you seen much in the movement in the markets in those areas?
100%, yes. There's been a large uptick, I've noticed, on buyers, vendors selling for reasons that they can actually get to their lifestyle choice and work from there. Two of the properties I sold most recently were exactly for that reason. These vendors would not have been selling otherwise. They're selling because their work has changed. They can work from home. They can now work. They can now move down to the peninsula. One of them is moving all the way down to Mornington. They were city-based. Now they're going to have a lifestyle home down the Mornington and work from home, potentially commute to the city, once a fortnight or whatever for a meeting and so forth. And the other is actually moving into the country. So they're doing the tree change from, again, inner city, Port Melbourne, getting out of the hustle and bustle of the inner city and moving out past Bendigo way. So there is a definite shift. And as a result, some of these country areas or remote areas actually seeing rises in property values. A friend of mine, his client had a property in Red Hill. So that's, a couple of hours or 2.5 hours out of Melbourne. I think they were hoping, their dream price was around the mid 3 mil. So it's a large estate with some magnificent views out towards Port Phillip Island, around that sort of area. They achieved 5 million. So not only did they achieve their dream, but they won Pat's Lotto at the same time. It was just, I'm staggered. So some of these, tree changes, they've got money, are moving out of town and buying up some crazy lifestyle properties. Now, how long that sort of, little boom is going to happen, I'm not sure. But right now, it's definitely happening in those sort of lifestyle areas.
Very good.
All right, since there's no other questions, I want to thank our panelists for all their insights today, and also those who attended. Thank you so much for your time, and I guess we're ending the webinar now.
Thanks for having us, Tracee.
Cool. Thanks so much.
Thank you.
Bye.